Hi, folks. I hope you can hear and see me. Please confirm on the comments. Good morning, Ayush. Good morning, Neeraj. Thank you, Ayush. I'm not expecting too many people today. I think people are badly bruised and more to come, I think. So, like always, we will wait for a few more minutes. Hello, Ujwal. Let me also share my screen. See some charts. Voice is not clear, I used to saying. Is that right? This time I'm not using any wireless mic also. Is it fine? Yeah, tell me. Yeah, usual Monday may cause Nifty to slip more. Yes, you're right. Clear for others. It is fine. Thank you, Manvav. Thank you. Good morning, everybody. We will take the questions after the first 10-15 minutes of market charts discussion. Uh, just give me a second. Hello, Waterworks. Hello, Pradeep Singh. Okay, let's start. Let's start. We have a good forum. So we all know what's happening in the markets, but we will uh, just 1 second. Okay. So there has been reasonable turmoil, um, and it is pointing to significant further downgrading also. Um, this bluff has been called off by China yesterday. I think the US was posturing about these tariffs that people will come and negotiate, but China has sort of called their bluff and you know counter attack has come. So now it is a matter of a lot of egos and who is going to back off now. Um, that is now the tricky situation. India is not so much involved, but we will get ramped by these big giants fighting with each other. In context, our export is like less than 3% of GDP. So we must keep that context in mind that, this is not the end of the world for Indian market. Um, okay, some people are saying audio is not clear. Let me change my laptop. Just give me 1 minute then. I'll change this. Just give me 1 minute, please.
सब कुछ होगा।
ओके, बैटरी है। ओके, ओके, sorry folks, let me close this then. Okay, Apple always works, it seems. This is my daughter's laptop. Okay, okay, let's see. Now I can't present my charts anyhow. So the bluff has been called off by China, and it is now sort of full blown war. These days wars happen on economic front. It doesn't happen more or less between the militaries. So very tricky situation. I I don't think anybody really has any answer in terms of how this will resolve, when this will resolve. But certainly it will create fantastic opportunities at some point, if not already. And that I think is the silver lining that we have to look forward to, that every 5-10 years we will have one significant opportunity and a new bull run can emerge post that. So nothing in the very short term, but in the long term, I think we have significant ground to gain. The few things that are working, if we were to look at the positives, one of course is this context of India's amount of export. So yes, pharma, IT, auto components, uh, some of them will get hit. Um, the overall imports into the US are about 3.5 to 3.6 trillion dollars. Entire imports, whether they are components, whether they are built up products, so on and so forth. And the whole argument is about on an average 20% tariff, so which is about $700 billion. So $700 billion of an issue has caused $11 trillion of market cap loss just in the US. And if I combine all the rest of the world market cap loss, probably it is somewhere near $15 trillion. So $15 trillion have been lost for the sake of this argument about 700 billion of tariff. I mean, how silly is this, that you know America has shot its own foot in trying to get this 700 billion. And this 700 billion is also a fleeting amount, because once you apply tariffs, prices go up, inflation goes up, the demand may collapse. So you may not have that 3.5 trillion imports to put tariff on. It may become 2 trillion. So extremely, I would say, disappointing knee-jerk reactions from the US president's office. More than us, I think America is shocked. There are stories about, for instance, a American importer who was buying stuff from a Chinese factory and had a 10-year agreement with Walmart to supply at a certain price. Now he can't do that. Who will bear this margin? Neither the factory owner is going to bear that margin, neither he has that much margin. So a lot of businesses are going to get disrupted, and that will create opportunities. So there have been many instances in the past where India has lost these opportunities of China plus one kind of situation. Here, another opportunity is getting presented. Our government should act fast. They should create a war room. They should create a ministry of how to get people to invest in India and use lower tariffs than others, Vietnam or China or some other place. So many opportunities in the past that have been lost are still an opportunity. Um, but we really don't know how many of those will get encashed. Some of the silver linings are also in the oil price, where oil has come off dramatically to $62 or somewhere near that. That certainly helps us. So from that point of view, that will be a tailwind for India. The whole fact that money is coming off US markets will go somewhere, even if it is damaged. So, investors who are getting out of US markets are going to deploy that money somewhere. Could it be emerging markets? Could it be more perhaps bonds? Could it be gold? So other markets other than US equity will gain because of this. So this is a positive from that perspective also. Yes, sentimentally we will fall with the US till such time that this clarity is there. Okay, now at the end of the day, what is the tariff? So Indian business wants to know, एक बार बता दो what is the tariff, and we'll get on with our lives. Uh, so I think 9th April is some detail that has to come out. Itemized tariff structure is going to come out. That is now a point which some exporters are waiting. Other exporters, like I already mentioned on Twitter yesterday, a friend of mine who's an exporter, he's already getting letters from his US importers that let's sort of divide this tariff between the two of us and let the business start. So all these things will happen, and currently what we are seeing is basically panic, and essentially a good time to accumulate whatever asset classes you are going to accumulate, whether it is gold, whether it is equities. um, always when others are panicking, you need not be panicking. That should be the situation. But yes, things are grim, and there is no set path where we are going. This could, if it really goes wrong, it could go into a situation where a complete sort of isolation uh, of each country may happen. So there may again, the Cold War kind of group formation, Russia, China on one side. India actually is sort of in middle ground. India is playing that tactic of not to be seen as with China and Russia, or to be seen with US. I don't know how good is that, but at some point India will have to align, I think, because these two groups will not let it live otherwise. Um, so I mean, on a index front, we are hurtling down. Monday is likely to be another sharp gap down open, but whatever is now happening is happening externally. Um, it will have very limited impact internally. So yes, some companies will have some tariff problems, but more or less the entire market is not getting impacted by this, other than the sentiment, other than the FII outflow, and other than some domestic outflow also that happened as of yesterday. So will we go down to a new low? That is a possibility. Nifty still has room to go down to its recent low. So if we go there, that may be a double bottom kind of situation for Nifty. For small caps and mid caps, it is going to be a difficult situation also, as domestic institutions, if they don't follow up with their buying, then who is a buyer in these mid caps and small caps? That could be a situation. So this is where we are. We'll open up the questions. 11:14 is what I have on my clock. So we'll go from 11:14 to 12 o'clock. Whatever questions we can cover, we will cover. The first question is from Ayush. We overanalyze Nifty always. Should our exits be stock specific, or should exit be on basis of breaking of Nifty supports? Should we sell all and run now? So, Ayush, there are two schools of thoughts to this, and there is no right or wrong answer here. There are traders or investors who believe in more tactical allocation. So, for instance, if we see the weekend investing context, we have several strategies which are absolute momentum in nature, which go to cash. They are sitting in cash. All cap is probably sitting in 85% cash. HNI Wealth Builder is at, I think, 60% cash. MI25 is 50-60%, somewhere near that. So there are strategies which are there in those cash levels. And that is tactical in nature. So they will go to cash, they will sit in cash, and then they will probably also be late in, allocating when once the market does start, whenever it does start. The other way is to not be so tactical in your movement of funds, and you stay within the space and you try to protect yourself as much as you can within that space by moving into defensive stocks, which is basically the rotational momentum. So no right or wrongs here, but yes, there are practitioners who use index exits as exiting from portfolio, and there are practitioners who use stock specific exits as exits from those stocks. Both can work, both will work at their own time and working. So no right or wrong, but both are good strategies, I would say. Over a span of 5-7 years, both should do well. Arun says, will INR appreciate? The purpose that people say Trump has is to engineer a fall of Wall Street. This could be a conspiracy theory, but that's what it seems like to me also, that he is trying to engineer a fall down so that this Wall Street that has been gaining on the main street. So the average American has not gained, whereas Wall Street has gained. He wants to reverse that trend. That let Wall Street suffer for some time and let the person on the main street uh, be get enriched to some extent, and jobs to come back, manufacturing to come back, and for that he wants to lower the US dollar. He wants to lower the interest rate. So once a fall is engineered, interest rates will have to come down. As you would have seen, the US 10-year yield is already below 4% now, because the money is gushing out of, see, understand this dynamics. Money is gushing out of equity. Some of it will go to bonds. As bond demand for bonds will go up, yield starts to drop. As the yield in the market starts to drop, the Fed will have to follow that curve. It can't remain at where it is while the market is pricing the yield lower. So uh, once the yields comes down, the average person gets relief. They can buy homes at lower mortgage rates. Businesses gets loans at lower rates. So lower rates can then restructure the economy, and the new businesses that start to formulate according to them. A lot of manufacturing will take place, construction of factories. All that is conducive environment when interest rates are low. So it is being seen to be a engineered event. They know this is going to happen, and it is not a surprise for them. Uh, so if that intent succeeds, yes, dollar should depreciate against most currencies. Dollar index is also falling. It's nearly 101 now. It was 110 just few months back. So INR should appreciate to some extent, but RBI has its own, ways of massaging the USD INR. So they don't allow beyond a certain, either appreciation too much or depreciation too much. They like to sit in a band. So if RBI were to not participate, I think yes, and INR should appreciate. But I think to protect the exporters, they're already damaged now. The exporters are bleeding. So to protect them, maybe the INR will not be allowed to appreciate as much. Gold and silver, see, there are two dynamics that are playing out. One is that everybody in an uncertain environment wants gold, and that's what has been happening, and it is not over yet. So this episode may prompt more people to buy gold for the long term. More central banks may say, I don't want to carry US reserves in my US treasuries in my reserves. I will keep gold instead. So gold demand may, I think, go through the roof. Even though rupee may appreciate a little bit, 2, 3, 4, 5%, but if gold demand goes through the roof and dollar gold price goes through the roof, then it doesn't matter whether rupee is appreciating or not, gold price will go up. Silver, I can't say. Silver is a very, very speculative uh, commodity. Silver has no role right now in the monetary system. Gold has a role because central banks are holding it. If they start to hold silver, then yes, it will become important. But for me right now, I think silver is a very poor cousin of gold that tags along gold, and in very volatile phases, it will go sharply up or sharply down. Vidya Sagar says, when where can Nifty open tomorrow, sir? सो सागर साहब, कल छुट्टी है, कल संडे मनाइए, मंडे को सुबह देखेंगे क्या होता है. देर इज़ नो पॉइंट ऑफ वरिंग अबाउट वेयर निफ्टी विल ओपन. As medium to long term investors, we should not have undue focus on the index movement. Let the short term speculators and traders, worry about that. I don't think we need to worry about this at all. But yes, the futures on Gift Nifty were showing some 500 points lower. I read somewhere yesterday evening. Neeraj says, in the current market, where should one invest additional capital, debt, gold, or equity? And within equity, should be focused on large cap, mid cap, or small cap stocks. So certainly, one should invest in equity. One should also invest in gold. Debt, I'm not so sure of, especially from India context, because we are not uh, at a very high interest rate level, from where we are seeing that a lot of interest rates will come down and hence bonds will do better. We are somewhere in the middle. So there is, while there is scope of some interest rate lowering, but there's not so much scope also. So debt, I'm not so sure. But gold and equity, yes, allocation should be done. Within equity, I think the more that I read about, where uh, the flows are going, it seems like the safer, because we are in a slightly, you know you can say volatile high VIX, although VIX has not gone up as much, but higher than recent times uh, environment. So you would want to perhaps be in more in large caps or other bigger mid caps, who can sustain significant periods of stress. So what is the difference really between some large caps and small cap stocks? Small cap stocks really take a dive when the troubled environment is there, because they don't have that kind of sustenance capacity. Some of them, they may be more higher leveraged. So you should go with stocks perhaps with who are more sustainable, who can there can be more confidence in terms of longevity, and hence the larger mid caps and large caps probably come to that name. We have a full house, 230 people. I was expecting lesser number of people today, but that's great. Thank you so much. Okay. Sarup says, please start a small case with world markets as part of it. So, the regulations don't allow us to run a mixed bag small case. So, we have a separate portfolio, not part of weekend investing SEBI license, but separately in the company. And that is running a experimental US portfolio since October 2023. It has done very well. We will try to create a product out of that soon. And this is great timing also, that US markets will be down and we should be able to start here. We'll announce that whenever we are able to do that. So I think it is important that we also invest in the US markets as investors, uh, diversify across markets, and diversify across asset classes. Um, Next question is from Karan Rawat. Is gold just cooling off, or is there some reason for the last 1 2 days of volatility? Also, dollar index bounced back smartly. How do you read? So I think as short-term investors, the movement in gold was very volatile. From 3170, we almost came to I think 3020 or somewhere near that. But my view, this rally started from $2,000. We are at 3100 or near about there. 100 $200 here or there will happen in normal course of things. So we don't want to be perturbed about that. I think there is a good chance that gold can come down to maybe even $2,800. See, if you are going up $1,100 in a couple of years, then there is a good chance that you will give up 20-30% of that gain at some point of time. Like the first retracement, as they say, Fibonacci retracement, 33% or somewhere near that. That is always possible. So, and if you see the back history of gold, gold in 2001 was $235. It went to $1,950 by 2011. Then from $1,950, it came back to $1,050 by 2015. A retracement of almost 40%, 40-45%. In Indian rupee terms, it did not retrace as much because rupee was depreciating and we came down only 25% or something like that. So 50%, losing 50% of the gain is also not out of the question. So right now, I think the environment is such that gold is not going to fall off. But I am very biased in terms of gold being long and being a permanent allocation in your portfolio. So I don't look at it as a trade. I don't think I want to get out of it. So and only sort of rebalance my assets. Like if I, let's say, if my allocation thesis is that I want to keep uh, as much gold as my equity portfolio, let's say if that was my model portfolio, then we basically, at the end of the year, if my equity has gone down, it will be at 35%. Gold has gone up, it will be at 65. At the end of the year, I'll rebalance them both to 50. So that is sort of the, I think, the nicer way of doing this. Instead of looking at it as a trade, that when should I get out of gold, it's an allocation. Equity is an allocation, gold is an allocation. They will keep moving up and down. Keep rebalancing them every 6 months, every 1 year. You're moving money from where you're taking profits basically automatically from where you're making gains. You may say that that is not the momentum way, but you don't have to apply momentum everywhere. Uh, Dollar index, I think, is engineered. It is designed to go down. I think it will go down to nearly 90 levels. That is my thought process. So rupee will gain and dollar should lose. Okay, next. Uh, Ujjwal Jain has any screener-like tool to analyze US stocks. I think there must be plenty. I haven't used any. I use Google Sheets to draw prices into Google Sheet and I analyze them there. But I'm sure there are tools available which can make lives easier. Abhilash says small case versus mutual fund. Okay, interesting question. So I am a small case manager. I am I was the first small case manager. So I am very biased for small case. So let me give that disclaimer. Uh, I think small case ushered in a revolution of kinds in investing in India. Mutual funds have nothing bad about them. So I am not bad mouthing mutual funds at all. There are people who are happy to give funds to mutual funds and let the manager do whatever he's doing and you know sleep peacefully. That's fine as well. There is another set of people who want to be more involved, who want to see what is happening in their portfolio, who want to have some more control over that portfolio. That in case tomorrow I want to not have a particular stock or to customize my portfolio, or today morning I feel like market is going to crash in the second half of the session, so I want to get out, or I want to partially quickly get out. uh, all those things take time in mutual funds. That is number one. Number two, mutual funds, like you'll buy a mutual fund of a AMC brand. I don't want to name any, but which are the bigger AMC brands. Who is the fund manager? That can keep changing every 2 3 years. Some new fund manager may come. What is his approach? How does he look at the markets? May be a very different from the philosophy of the previous fund manager. The AMC itself does not have a philosophy as such. They will create a basket that yes, this is value orientation, this is momentum orientation, but each fund manager has his style. Sometimes you will not even come to know that the fund manager is gone. He has resigned. Somebody else has taken his place. His junior is now managing the funds. But because in our mind we are blinded that yes, that AMC is so nice, it has a big brand, that we say okay, theek hi ho raha hoga kuch. So it is like fill it, shut it, forget it in mutual funds. In small case, it is like in your face, absolutely transparent. You know what is happening. Your stocks and your money is in your control at all times, and you are able to interact with the fund manager. You are able to ask your question, why this happened, why that is happening, how do I do this. There's a Chinese wall. You talk to the RM. You cannot talk to a mutual fund manager. He cannot talk to 5 million people. I am a small case manager, so I can talk to, or my small team can talk to, the limited number of clients we have. So there are these advantages, and a different kind of people want to have small case, who are more hands on, who, and I don't even want to talk about performance. One is that I can't talk about performance, but people who have experienced it know the difference in the performance also. There are some people who create a FUD about costs. Small case cost is high, taxation will be more. All that accounted for the performance people have seen. There is a reason why small case growth has been like this. They've just raised some few $100 million. There is a reason for that, and there is a growing, you can say, a a community around small case. So as I said, I am also a little biased, but do your due diligence. If you like what you see, you should do it. I think small case has given retail investors a access to professional managers, which was which is currently only available to people like, who have 50 lakhs or more, who can apply in a PMS, or 1 crore or more, who can apply in a AIF and can talk to a manager. I think the same capability, the same professionalism was offered to retail investors also, and I think that is the big win of small case. I think I should go to the next question before some people object. Is there any plan to open some strategies to invest in US market as well? So as I mentioned previously, we will certainly be doing that, but not as the SEBI registered RA, because as a license holder we can't do that. But SEBI allows us to do it separately, and we will create a separate team to do that, and we should be able to do that in the next few months, I think. Vipul Paul says, if base money is getting increased, how do we get to know that we are getting rich or we are entering into another bracket? So this is a very deeper, longer discussion, but just in short, I would say that the purpose of the politicians is to keep people thinking that they are getting rich. So, increase of base money is causing inflation, not just in the things that you consume, but also in the assets that you hold. So, your house is going up, your stocks are going up, gold is going up, uh, you have invested in art that is going up. Sometimes even the car that you buy for a couple of years can go up if inflation is much higher than the depreciation that is happening. So the idea is to make people feel good. So what is happening? Let's say um, somebody is getting a pension of, let's say, $4,000, but the purchasing power of that dollar is continuously reducing, right? So you give him 2% increment, 3% increment every year, and he will start feeling ki, Acha, I'm getting more than last year. But actually speaking, in real terms, you are taking away the purchasing power, because that is the only way of taking away money from people without making them realize it. So if you have some, I don't know how many lakh crores of money sitting in FDs. Now that is the money which feels very good that I'm getting 6%. But actually they are losing purchasing power every year, because things are getting more expensive than 6%. And that 6% also is taxable. So that's the way in which government steals from you while making you feel happy about it. So that is a very nice trick, right? That you should not feel that you're getting tricked, as well as you're getting tricked and you're getting, your money is getting stolen also. So compare yourself in gold terms. Then you will know whether you're gaining or losing. If you have, let's say, a house worth 1 crore, and today rate of gold is so much, then you say my house is worth so many ounces of gold. And 10 years later, when your house will be worth maybe 5 times, and then you compare it with gold price at that point of time, and this is now worth so many ounces of gold, that comparison is a real comparison, because gold is actually tracking the inflation and the money supply growth. So everything measured in gold terms instead of rupee or dollar terms actually measures whether you're getting rich or poor. So please do this exercise, where you were 10 years back versus gold price, where you are now versus gold price, and you will have the answer. Manubhav says, investor in wealth builder. If a strategy is 100% in stocks, can we assume that it's in bull market? More or less, I would say 100% allocation will happen once strong trends are there, and only when market is dropping off like a cliff will you really see the strategy go into cash. So when strategy goes in more than 50% cash, I think that is a time where at least I start to feel that market is in complete bear grip, and we will go from 50 to 40 to 30 to 20, as we have seen in many other strategies also. So sudden deployment back of cash is that first signal that yes, the bull market may be back on. But then there could be some whiplash also. It is not that always the deployment is perfect. It could be a false signal also. But yes, at 100% normally, it means that there are enough opportunities in the market which the strategy is able to find. Dheeraj says, how do you do momentum investing in this falling volatile market, or do you sit in cash with exposure to gold or T-bills? So as I have been mentioning, there are two ways in which we do momentum investing. One is absolute momentum, where we sit in cash. Several of our strategies are sitting in 50 to 80% cash, and those in that type of momentum investing. And then there is another style of investing called rotational momentum investing, where we don't go to cash, but we try to rotate into those stocks that have fallen the least. And once the market starts to go up, they will rotate back into the more uh, faster stocks. So both ways, there's no right or wrong answer. They both make money. Um, when you go to cash, you basically are putting a hard stop to the loss that you are making. Let's say from here onwards, market drops 20% more. Let's say. So the strategies which are already in cash, let's say 80% cash, 90% cash, will not drop as much because the allocation is very poor around now. But then on the flip side, when the market starts to go up, they may not allocate for the first 20% of the market because the trends are forming. So there is a give or take. There's no right or wrong. So that's how the. But conventional momentum investing, usually most of the strategies will not go to cash, and they will stay with the market, moving into more um, stronger stocks. Uh, Meghala Ramu says, because of RBI MPC meeting, can we have positive impact in market after gap down opening? Yes, it is very much possible. There is room for RBI to cut rates. RBI is also infusing liquidity every now and then. In the last few weeks, I think the new governor is very oriented towards keeping liquidity flush. So there is a chance that we open gap down, and that may be the bottom for the day on Monday is possible. So much panic, but VIX is still below 20. Any thoughts? So, yeah, VIX has been very, very low, and we haven't seen a high VIX in a very, very long time. I think last time it was at COVID. So, it tells you that market is not really panicking. I mean, it has been a very orderly uh, come off the coming off of prices. It is only when the disorderly movement starts in the market that the VIX really starts to go up. So if VIX remains low, I think that is very good that we are coming off in an orderly manner, and I don't hope that VIX goes up. Anushka Arora says, have you analyzed and compared performance of active momentum mutual funds? No, I have not done that. Could you create a video for this? No, I am in no business to compare myself with others and prove anything. In case you would like to do that, please do it at your end. I have a target to beat the benchmarks that I am pitted my strategies against. As long as I'm doing that, I'm happy. I don't have to become number one against anybody else. If they are better, good luck to them. If they are worse off, they should try harder. Rajesh says, I have invested in NNF 10 small case of approximately 1 lakh. I think, sir, that investment is below the minimum advised recommendation for that strategy. So please bring it up to that level. So, yes, you can pump in more money at your convenience. I cannot advise you in terms of when you should do that. That is beyond my license. Um, DS says experts around the globe are saying that gold will fall by 35 to 50%. Good luck to those experts. Dheeraj says, what? But if manufacturing goes to US, won't price be higher like labor cost is high? Yes, manufacturing in the US is a challenge. See, it is like saying that, like this, I'll create some factories and my people will be skilled and they will work like, Vietnamese worker at $2 an hour or $2 a day, and, everything will be hunky dory. It doesn't happen like that. So these are wish lists that are unlikely to come true. I certainly don't believe this plan is going to work. That's my thought process. I could be wrong for sure, but I don't see that working. Okay, that was not a question. Abhinav says, should one exit their gold position based on overbought thought process? Depends on why you bought in the first place. If you bought gold as a trading position and you have a exit plan in place, execute that exit plan. If it is a trading position which did not have an exit plan, then yes, some profit booking could be done here. If it is not a trading position, if it's an allocation, I don't think you should be getting out. Uh, Again, depends upon how you are looking at it as a trade. I have been into gold since $200, and I've been building my position ever since. I never think of selling it. You may say that, what's the point then? Well, the point is that it is getting rebalanced every year. So if gold goes up, I take some money off, put it into equity. If equity goes up, I take some money off from equity, put it into gold. So it is not selling off position because of position's sake. It is selling off position because of I want to keep a balance in my portfolio. So from that point of view, and of course, I mean, if you need the money, certainly sell and enjoy your life. I mean, I certainly would not think twice. If you need something to improve your life and you have the money in gold or equity, certainly sell some of it and improve your life. Elon Musk says gold ETF versus stocks, mutual funds, which will be safer to invest for this year. I think you have not put physical gold as an option. So I would have said physical gold is the safest. But gold ETF versus stock mutual funds, right now for 5th of April, I think gold ETFs are looking better. Uh, but what happens over the next 1 year is tough to say. But allocation, try to have a mix of both and have allocation both to stocks as well as to gold. Okay. Ayush says, are there any buyers left in the market? Is there any way to predict the bottom? No, I don't see there any way to predict the bottom. You have to follow trends. As soon as you find that an uptrend is in place, that is, and then you look back, that was the bottom. So predicting tops and bottoms is impossible. Sometimes you get lucky and you are able to predict that, but nobody has been able to do it consistently uh, ever. Um, Whether there are any buyers left in the market now or not, I think every fall will have people move out of the markets. They will give up on the markets and say, this is not for me. And every fall will also bring in new money where people will say there's an opportunity, let's start investing in stocks. So that dynamic continues to play. It's like a new crop keep coming every season. So every season of bull rally you will see people leave their jobs and become traders. Then their necks will get cut off, they will go back to their jobs. Investors will lose patience, give up their positions, go away from the market, and new set of people will start to come into the market. And as the bull market will again go higher, again new set of people will say, doing a job is useless. Let's start to trade. So that cycle is endless cycle that will go on. Which sector will perform better in the current situation? I wish I knew. I don't think I know that. Sorry, Ravi. Arun says, is there a risk in gold ETFs that actual gold may not exist? Now, if I say that, that risk is certainly there, I mean, a lot of people will get spooked. But if I were to answer this honestly, the risk is there. You cannot say that there is no risk. Risk is there. Whether that risk or the probability of that happening is high, I don't think so. It's very low. But even if it is 0.001% and that event happens, we are doomed. So there is no, solace in having a 0.01% probability or 10% probability. If it has to happen, it will happen. So if you are very particular that it should be ironclad, risk-free environment, then get physical gold and dig a hole in your garden and put it there. Uh, or believe that, or another thing could be you start to build your belief. So let's say you go to a ETF AMC office and tell them, okay, show me the audited, you know gold audit report. They say that they will show you. If you go to their office, they will show you, but they will not send it to you on email. They have tried that with Nippon and with Zerodha. I've talked to their CEOs. They say, if you come to our office, we'll show you that it is 100% backed. But if you read their offer document, it says they will hold 100% gold in gold or gold equivalents. Now, what is a gold equivalent? A gold equivalent could be a futures contract on MCX, which requires only 5% of the money to be put up. So there is no 100% of 100% here. Um, but from all what I've heard, all Indian gold ETF folks keep gold with custodians. It is audited. They have certificates, and I think there is no reason to disbelieve that. Um, we've never had any crisis of that kind. Uh, but then again, a crisis has to happen to really open one's eyes. So hence, that is why the most pristine form of gold is physical gold, because the property of gold, because of which you are buying gold, is that there should be no counterparty risk to that. If there is counterparty risk, then gold becomes like anything else. This financialization of instruments has created this entire world of products around it. Gold was never supposed to be in paper format. So now, if actually, I'll just take one more minute on this. If actually you were able to see the London Bullion Metal Exchange, the Bank of England vault is there, then New York vault is there. Nobody knows how much gold is there and what kind of paper contracts are trading based on that gold. So they say there is 22 times more paper contracts than there is gold. So if the entire world is like, for example, 1 ton, then 22 tons of paper is getting transacted. And if all 22 tons buyer says that I want delivery, there is only 1 ton of gold to deliver. So that's the kind of derivative loop that the market has made around every product. Similarly, in stocks, I mean, the number of Reliance stocks that are there, the open interest on the Reliance futures contract is going to be much higher. But fortunately, they are not, they are cash settled. If all of them demanded delivery, where will the delivery come from? So this is the situation, and I think gold prices certainly will go up, but I am very biased, so discount it with that factor. अमित सैनी says निफ्टी कभी भी जाए बस मार्केट में बने रहना है. ओके सर, सो गुड, निफ्टी कहीं भी जाए बट मार्केट में बने रहना है, ठीक है जी. Pradeep Singh says, is there any plan to open some strategies to invest in US market as well? I've already answered that. Do you think Indian market is much stronger than US market? Indian market has fallen much ahead of the US market. So comparatively, we may have lesser room to fall than US markets. That's about it. Stronger, weaker, I don't think is quantifiable as such. Um, Google user says advisable to do lump sum in existing mutual portfolio now. I cannot advise that. Please ask your financial planner. Large, mid, or small cap, more in BAF funds. I can't advise. Sorry, but my in general, I would say I am not in favor of large of uh, investing in lump sums. I believe more in gradual investing for the whole reason that what if you invest lump sum and the market tanks the next day, you'll just feel very bad about that decision. And I want the investing journey to not be a excruciating pain, where to be that experience. The journey should be reasonably enjoyable. You should not be having sleepless nights. Oh, why did I do that? I've lost 20% in just 3 days. Gradually bring in money, even if that's loss of opportunity. Sometimes maybe there is a gain of opportunity by doing that. It's just because the entire market is such a psychology game. It is all about human psychology. So you don't want to be feeling bad about what you're doing. Why would you do that then? I mean, what's the purpose of coming to the market if making money becomes such an excruciating experience? So money making should be reasonably pleasurable. They should the I mean, at this stage of the market where portfolios have lost ground, and maybe we are nearer to the bottom than to the top. Uh, you have to train your mind so that it is not bothering you, at least not the entire day. That what will happen, Monday what will happen. If you are a reasonably mid to long term investor, this is part of the game. You signed up knowing that this is part of the game, and this should not bother you. Properly asset allocated funds. I mean, I have users who've come back and told me, they were 40-50% into gold. Their portfolio is hitting new all time highs till 2 days back. So all kinds of combinations are possible. They may not have made as much as maybe you have when you were 100% allocated to equity, but now they're enjoying that. They're saying we are better off with 16% versus 20% which other people have made. At least I'm not having sleepless nights. So again, it is all what you want out of the market is like an ocean. You have a bucket in the hand, you can fill as much as you want, but how you're going to fill it, what is going to be your experience is your experience. um, am I at the end of the hour? Yeah, 2 minutes. So Abhinav says Nifty and gold are inversely related. Any specific reason why both are falling together? I think you are looking at a micro trend. Just see from 1st of January what has happened. Just see from 1st of October 2024 what has happened. You will find always that whenever Nifty is falling, gold is doing well. On a 1 day basis, on 3 day basis, you cannot make this judgment. Bhanu, when can we expect FIs to start buying again? I hope they buy from Monday onwards, but I mean, who cares about what I think? Um Tough to say, sir. Tough to say. But I think this exodus from the US is going to bring money to emerging markets. That I'm very sure of. I think if you see the very broad picture is that the world's focus on US, the world's focus on USD will come down in the next 5 years. People will have to find other markets to satisfy their need, because dependence on this market is difficult. And I think it is good for the rest of the world. While this is a very short term pain that we are witnessing, this entire episode, I think, is good for the rest of the world. It's like taking a bitter pill right now for a good health, for a good life ahead of us. So I think I'll be reasonably optimistic on that. Uh, Last question, please. From Himanshu Sabarwal, can we assume that markets may go into time consolidation phase for a few years till all these variables settle down? I think certainly for a few quarters. Few years may or may not happen. I'm not so sure about few years. US markets may go into a consolidation for a few years. Indian market, because we have reasonably inherent growth, which is not going away, and we've come off to some extent at least. So I think will not see probably a very long term consolidation. But again, this is speculation. I mean, you could have a new market high in 6 months. Who knows? It all depends upon how liquidity moves. Maybe the US will say we are printing $20 trillion tomorrow. Let's all go up. Who knows what Trump will do? So that's the end of my time. Thank you so much for watching this, for coming on a Saturday morning, and for coming in such large numbers. I was expecting like 50 people, but 350 people have turned up. Thank you so much. You are very kind. We get very a lot of affection and love from a lot of investors, even when they're bleeding. So this is the beautiful part of the weekend investing community. People understand, and somehow I've repeatedly said this not just to please you, but in reality, that somehow small case or weekend investing has been able to attract more mature minds, and these mature minds actually understand the markets to a large extent, and I'm thankful for that. Actually, I mean, I see other fund managers who deal with all kinds of other investors who cannot stand even a one day loss in their portfolios. So they are the kinds who will have a very tough life as a fund manager. But thank you all. Bye.